angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a It is a very, 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 very high confidence play for me. I don't really like to put my name publicly behind things like that because people make stupid decisions. But in this scenario, CROX is a potential beast of a name that I have entered in on Friday, and we're going to talk about why it is a beast later on in the show. So make sure you stick around for that. When we get into that segment. Toby in the chat saying, good day, sir. And Christopher with the good morning. Good morning, guys. I hope you guys are doing well. It's Monday. We got to bring some energy here because it is a slow, dragging week, or at least it's feeling like that. I don't know about you guys, but I feel like it's already dragging. And I feel like it's going to continue to drag because today alone we have, let me count, 1, 2, 3, 4, 5, 6, 7 different times that Trump could be saying something during the market today. So you have 9 o'clock, 10:15, 11, 11:35, noon, 1:15, and 3 o'clock. So basically all day he's making different meetings and stuff. Some things are closed media, so we shouldn't really see an effect on the market. But again, a tweet can go out. He could come out and speak or whatever. Anything can happen, so you want to keep that on your radar all day today. Multiple things with Trump coming down the pike today specifically. Let's go over to our Catalyst Watch for the week and see what we got coming down the pike for the rest of the week. Now again, as I just alluded to, we have Trump basically all day today, making different meetings, signing executive orders, etc. So just be aware of that. Personally, I suggest using a news aggregator. I personally use Financial Juice. I'm not sponsored or anything like that. But they have a pretty good news aggregator. It keeps you up to date on like what news is going on. On top of that, if you are someone who can't weigh through the things that are necessarily important or not important, they highlight things in bold red when it's something that you may want to take attention to. So obviously they have other news on there, but I suggest giving that a look. If you don't have another news aggregator or something you use, I prefer Financial Juice. You use whatever you want. But on days like today and weeks like this week, it's very important, in my opinion, to have some sort of news aggregator by your side, especially if you're a day trader. Now, looking forward to the rest of today, we do have three Fed speakers, but 2 during market hours today, both at 1:30. You got Williams and Musalem. I can never say that guy's name right, but he's speaking today. And you have Bostic after hours as well. Going forward to tomorrow, we've got Nothing really on the U.S. side pre-market. We have a few Fed speakers pre-market. But nothing else. We do have consumer confidence. So once the market opens, I should say, consumer confidence and jolts. So you're going to want to be very, 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 very close attention to that, especially with tomorrow actually being Q3, the end of Q3. And then you got Goolsby at 1:30. So again, more Fed speakers speaking. Going forward to Wednesday, some of you guys may or may not have been paying attention, but the government may shut down again, which people think is bearish or is bullish for one reason or another. Whenever the government shuts down, I personally haven't seen a massive effect on the stock market. And whenever we extend the debt ceiling or whatever, again, the stock market doesn't have a massive turn either which way, at least in my opinion. I wouldn't buy into that too much. The only thing that I find interesting is this potential shutdown is on October 1st, which is the start of the last quarter. It's also the start of October. So that could be used as a narrative potentially for some level of a pullback or a retracement if the government does get shut down short term or whatever. The market may use that as a narrative to cause bear pressure and bear fear through the market. So that's something at least you want to be aware of as you're going into October. On top of that, you do have ADP employment. I actually really like using ADP employment to get a good idea of how the labor market's doing. So that's pre-market on Wednesday. That's at 8:15. Going forward to the rest of Wednesday, not too much going on. We're going to fast forward to Thursday and just kind of get through the week here really quickly. Factory orders at 10 o'clock. You have jobless claims. So you have ADP job numbers, employment data at 1. On Wednesday, on the 1st is what I meant to say. And then you also have jobless claims the following day. So a lot of labor data coming through this week, or at least I should say important labor data coming through this week, along with factory orders on Thursday. And finally, wrapping up the week on Friday, more Fed speakers and non-farm payroll. So very, 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 very busy week for labor data in the market. And we are very sensitive to that data right now. So the timing of all of this with how we're looking on the chart, with where we are in terms of, again, the end of the quarter, very, very, very interesting to see it all kind of align at the same time. So that's your catalyst watch for the week. Definitely going to be a busy one, as I alluded to at the beginning of the stream. Definitely going to be a busy kind of week, so make sure you're very aware of that. Negum with the morning in the chat. Good morning, my friend. Hope you are having a fantastic day. Let's look at the market real quick. So I do want to go over last week's price action. Let's look at the weekly candles here. Let me get rid of my doodles real quick. All right, it kind of formed a Bidochi candle-isk kind of thing. Tiny little close down week over week, or sorry, from the start of the week to the end of the week, because these are weekly candles, indicating some level of potential indecisiveness. Now, if you were here last week on Monday, I said, hey, just be mindful. We've got like 7 green weeks in a row. It wouldn't be shocking to see some level of a retracement or a red candle, some sort of cool off, something here, especially where we're sitting on the chart on the weekly. On the daily, things look a little bit different, but not by too much. Mostly had a pretty down week, really in the middle of the week, and kind of showed around basically like I just said on the week's open from last week. Closed a little bit lower, but basically right around there. Now looking like we're going to open up a little bit higher, around 665. Again, that all-time high, 667.34. So we're going to open pretty close to all-time highs. And as I've been saying to you guys on the show, the number you want to watch right now is essentially the devil's number, the super devil number. It's 666.66. That is the number. That's the kind of area I'm looking out for today on the open. Let me scroll up here. I don't know if I actually marked that out. Here, let's go on my 5-minute. Zoom out a little bit. I don't think I did. It was more of a mental note, but, oh wait, I have my line straight off. There we go. So that's 666.66 area, and then the 667.29 old all-time high, or I should say current all-time high. Those are the things, sorry, it's 0.34. So I got to make another line here for 0.34. 667.34. There we go. So it's looking like we're going to be opening up in a decent spot of, I want to say supply, for those of you that like supply resistance lines or areas. We're going to be opening up in a level of supply, in my opinion. As I alluded to on the program last week, as long as you're north this 661.04 area, well, really 659.11, as long as you're north this like general area, the market does tend to favor the bulls. But you do want to be careful because, again, we are leaning more into the end of the quarter. We're going to talk about that. I know I keep referencing it, but I want to talk about it. I want to make sure everyone floods in and everything. That way no one misses anything. So we are going to talk about that, what that really means for today and for tomorrow. Orca with the good morning, my friend, and the super devil's number. Yeah, man. It's the number of the beast plus 66 cents. That's what you want to keep an eye on today. Guys, if you haven't already, we've got a good amount of people showing up this morning. Do me a quick favor. I asked you twice a stream. I'm going to ask you once now. I'll ask you one more time, and that's it. Do me a favor if you haven't already. Interact with the stream wherever you are, on YouTube, on X. Drop a like. Follow me if you haven't. Hit the subscribe button. Whatever you do, say hi in the chat. I typically talk to you guys all day, so if you want to talk to me, feel free to drop a what's up in the chat, whether you're on Twitch, Kick, YouTube, Instagram, X. I think that's everywhere I'm streaming. Feel free to say what's up in the chat. I'll more than likely say hey back. If you have any questions, feel free to drop them in there as well. But most importantly, if there's one thing you could do for me, if you enjoyed this program, if you haven't already, pop on over to the YouTube channel, hit subscribe. Once we get to 500 subscribers, this will be an everyday show. We actually just hit 160 subscribers, so thank you guys for that support. The channel is actually growing exponentially. We are growing very, very, very fast, and I'm very, very happy to see the growth on the channel. Happy to see you guys are enjoying the content, even the curated content when I'm taking little snippets from the show, seeing great interaction. So I'm happy to see you guys are appreciating it. You're taking something away from this. The feedback has been phenomenal. And as long as you guys are enjoying it, as long as you guys are taking something away from it, I will continue to do it. But if you want it every single day, let's hit that $500 subscriber milestone. And this will be an every single day show. Thank you for your support. Alrighty. So we're going to look around. Right now we're getting a little bit of a red candle here in the pre-market. We're actually coming down to this LOI right here, the 664.55. So we're going to watch that at open here. It could be an interesting area to watch. Now, as you guys know, on Mondays, or maybe you don't know, maybe you're new to the show, Monday mornings, I tend to take it very, very slow. First 10, 15 minutes, unless there's like a primo chef's kiss kind of setup. Take it slow, relax. You typically have a lot of news or information over the weekend that's got to digest, not just for the market, but for individual stocks in general. You have things that different news comes out that affects different companies and can cause kind of not random, but aggressive, I want to say, movements, especially in the open as people reposition. Obviously, you see that pre-market as well, but definitely in market open, especially with market on open orders on a Monday, tend to get a little bit more volatility. So make sure to just allow yourself, especially if you're a day trader, that time to breathe on the Monday open. Now, if you're a swing trader and you see your positions up really nicely, that's a really good time, assuming you're buy to open on those options, to sell to close those options, as you'll see higher IV typically on a Monday morning versus other mornings, especially if the stock that you're long on happens to make a big move, right? Those are really good times. You may want to consider trimming some, and then you can always get back in and capture some of that IV like we talk about on this program. So it's a fantastic thing to consider if that's something that's more your speed. Alrighty, Hatchet with the good morning. BC, hello Adam, hello BC. Strange Maker with the morning, everybody. And I've got some weird spammer on Kick telling me that he's going to pay me $64 or something. So that's weird. I don't need $64. Thank you. Anyway, market's open. Let's get into it, guys. Let's have a fantastic week. Don't forget, stick around for the show. We're going to talk about CROX. This is a fantastic opportunity still. I'm going to give you guys the exact reasons why. And again, if you follow me on X, you saw that I initiated a long position on CROX, basically like down here, like 77, what was it, 77 something, 78, something like that. Big candle up, already hit my first price target of 81.69. Now we're currently in this big old earnings gap right now. Few price targets here. We're going to talk about that in a little bit. Make sure you stick around for that if you want a very interesting opportunity. As you guys know, I like my bottom feeder names, those names that are beaten down, have good brands, and they're near like a 52-week low or something. We might have just seen a very strong sign of a reversal here on CROX, not to mention this daily candle with really solid volume. Again, we'll get into that in a little bit. Let's touch on Grab, because I know we talked about Grab on this program here. And like I told you guys, as long as you're remaining north of that 591 area, this is really looking solid. And I wanted this kind of motion. It needs to cool off here, maybe even give it another week sitting in this range. Maybe not a week, maybe 3 or 4 days. Kind of sitting north of here, let it chill out, consolidate on like ideally sub 630 and north at this point of this wick on 925. We're sitting in that tight range, basically like 15-cent range here. It's going to look pretty solid for basically a hard move up, cooling down, consolidating over short-term EMAs. And it's also going to give time for this red daily star to come down, break that, and pop over my next price target here that we wicked off by a penny. Pretty solid, if I do say so myself, for a continued upside push. Do not sleep on Grab. All right, looking at the market now, let's get into SPY. Currently, this is the 1 minute. That looks funny. Currently, we broke under on the open, as you say, this little pre-market sell-off here, right into the open, right under 664.55. Bulls looking to try to get up a little bit here, but having a little bit of a struggle out the gate. Your Qs are right around that 600. Watch this LOI in the Qs, 599.36, looking for some area of support or some notion of support around this area for your big tech. And for IWM, also underneath the key LOI that's in play today, this 242.39. So we're looking for SPY and IWM if you're a bull today to recover those two key levels I just outlined here, as SPY is attempting to recover it right now. But IWM currently underneath it, so at least be mindful of that. Looking at the volatility, looking at our VIX, currently sub 16, which is better, but we are gapping up on volatility over the weekend. Looking at how volatility has been trending, we saw midweek last week got a decent pop, basically almost like a double toppy kind of thing on the VIX before kind of grinding to the downside. Getting a little bit of a gap up on the VIX with green in the market is very interesting to see, as I will continue to remind you how the VIX is calculated. It's calculated by the spread on SPX contracts. So the fact that the market's green right now and the VIX is green doesn't necessarily indicate that there is bear action coming, but more or less that there is a price disagreement, which we'll see in a little bit how this plays out as the market goes on through the day. VVIX is under 100, which is good if you're a bull, means there's a lower chance of volatility switching directions. And UVXY, so our longer term volatility, is actually red on the day. And again, I use UVXY as a means of tracking volatility for a little bit longer than just spot VIX. So it gives me a little bit more of an idea. It also gives me an idea of how market makers or people who are trading volatility related products outside of just the VIX may be trading, maybe looking for opportunities as well. So it's just like another little extra quiver in my hat to get an idea of what volatility could be looking like. Looking around at the market to our big names, our Mag 7 names right now, Microsoft is north of that 510.80 area, wicked beneath it. Currently chilling above it right now, but not much follow through here. Again, from last week, if you watch this show, big trigger level on Microsoft today, 512.76. It's had a hard time trying to get over that level. It's looking like it wants to get a push here, but if I wanted to be a bull, I would wait for that break. Back test and confirm. You might get a good day trade off of that. It's a little sketchy here on the daily, so you're going to want to see that level break with a little bit of force. So just be mindful of that if you are a bull on Microsoft. On the other hand, NVIDIA getting near this level, this 183.30. You guys know how important this level is. In fact, I might take a short off this level because of how important this level is. Now, again, if NVIDIA breaks it, this thing's going to pop. It's going to pop hard, but it has had a very, very, very hard time getting through that area. We're going to keep the 180 puts on NVIDIA on watch for now. Not that I really want to be front running a short position on a Monday morning, but we'll just keep a watch on them. Currently, those 180 puts for this week are currently trading about $1.80. So we'll see here how we react to this level. Again, not a position you want to rush. You don't want to rush a short on, especially NVIDIA on a Monday. But again, if we zoom out on the daily here, you guys see this blue line on my chart, this 183.30, how important this level is and how many times it's consistently rejected. Again, when and if it breaks, it will get a hard pop. So if I'm a bull, I want this to pop. If I'm a bear, this would be a point in time where I'd want to take a short position. So I'm waiting. If there's a short opportunity, I would take it. However, if we see some volume, if we consolidate above it and then start to push to the upside, then I want to be a long. So either way, there is a trade opportunity here on NVIDIA. It's just a matter of I don't think it's going to break today. But as I alluded to with how Q3 is ending tomorrow, if NVIDIA was to get a hard break today through tomorrow, it would actually make some logical sense. So not a position I want to rush, but it is something I want to keep an eye on. Now, in the event that we reject, we come back to 180, then assuming the time of day, I'd actually look for calls to see if, assuming this like lower 180 area, basically the open holds, and it just kind of grinds up and makes an attempt to break again. So two schools of thought here. I think there is a play for NVIDIA today if you are a day trader. It's just a matter of waiting to see if that opportunity ends up presenting itself, and not rushing it for sure. So at least you got a day trade there, or at least a plan there. It's a matter of, again, waiting and seeing if there is any legs to said plan. All right, let's take a quick look at Apple pushing to the downside here on the open. Still have that gap open, but now we're kind of looking like we're building some level of consolidation here, or a base. You have your short-term EMAs pushing up here. Watch for that 8 EMA tap or break potentially between basically today and Wednesday. What's that right now? That is 251.03. So for simplicity's sake, watch 250. 250 breaks, you're more than likely to take a short on Apple. 250 holds, may want to look for an opportunity for a long, at least in terms of a very short swing trade. This has a lot of momentum, had a big candle up, consolidated, another leg up, might look to consolidate again. So it's not a position where you necessarily want to rush again, but it is something to at least keep on your radar if you would like to trade the Mag 7 names. We just wicked that key resistance level here on NVIDIA, so if we hover up here a little longer, I will open a short. Because the risk to reward here is pretty solid. Those contracts are trading around $1.60. I'm debating if I'm going to open it. You know, I'm going to open a few. It's 10.3. 180. All right, I'm long those 180 puts at 161 average. Oh, that moved quick. So I'm looking for this back test right here of this POC area, a little area of consolidation. Take some profit. Then I could slap a stop on because it should reject back to open if this reject holds, and I don't want to risk the potential break to the upside, like if we get a violent reversal. So the risk to reward here, I'm looking for about 180-ish, 180, 190 here, in that neighborhood on these contracts. Getting it down again to around the POC, maybe the 8 EMA tap here, and then slapping a stop loss on to be safe. So right now I'm going to trim some out. And there's my 180. So we're going to trim some here. I'm going to trim again. All right, there's 14%, and I'm going to slap a stop loss at break even. So now it's a win-win. Now I've gained 14% on the contracts that I trimmed out. I traded my plan. This was the simple plan. Played the rejection, played to the POC. Now there's a chance here that bulls step in. We have the most volume of the day so far traded at this area. So we could get a bounce here. However, if this breaks, you do have this green SAR here. The MACD is a little overextended. So if this does break to the downside, we could get a further pull down again to that 180-ish area, which I actually want to go long. So that would be the short play I'm looking for here, but do not ride this play, especially on a short play, without a stop loss where it currently sits right now, because there is a high probability that if the bulls do step in on this POC, this reverses and at least attempts to break again. But there's a chance here if the if the bulls can't defend, that we do sink this, and then momentum gains to the downside short term, at least to get us around back to open, like 180 would be very likely. So good risk to reward here. Even if you don't like that risk to reward, you're at least netting 14% here, which is great. You can lock in a 14% gain, and if that's all you want, you can walk with that and be happy. So either way, you're at a win-win scenario here on NVIDIA. Leaving 2 wicks down here, so that's suggesting there could be a reversal here for the bulls, especially if it breaks over this high of this candle here. So you're going to want to see 182.86 as your upside trigger for the bulls. Your downside trigger, you could probably use 182.22. So you got about like a 40-50 cent space here either which way. And you can see the indecision here. You see how the candle is kind of closing with a wick up and a wick down. That's insinuating that there's a little bit of a fight here at the POC. The bulls and the bears are fighting it out here to see who's going to win this battle, essentially. Will the sellers or will the buyers win here? So we're currently sitting here. We're going to wait and see. Again, if we break this upper trigger here, this 182.87, I'll close out. Now, again, that stops on in the case that this just violently pops up and I might not have the opportunity to get out in profit and get out at break even. But either way, it's a good opportunity. Getting a little bit of a bull push here, so we'll see. Now, if this stays sub this 182.87 area for the next 2 to 3 minutes, there is a higher probability of getting a downside push. So as long as it stays under that for the next like 2 or 3 candles here, because we're on the 1 minute chart, then we will more than likely break to the downside. Eddie, good morning. Eddie dropping the "yer" in the chat. I was wondering where you were, man. I didn't get my morning "yer" in. No one else beat you to it. Toby beat you to the punch last week. Eddie dropping the "yer" in the chat. All right, left another wick up here. So again, a lot of indecisiveness here. So you're more than likely seeing some profit taking by some bulls, knowing how liquid this area is on the daily chart. Again, to zoom out a bit on the daily, this is your daily chart for NVIDIA up here. This blue line is where we are on this chart right now. And just look at these daily candles. A lot of liquidity, basically at all-time highs for NVIDIA. Doesn't mean it can't break it and keep going. There we go. It just broke it to the upside. I'm going to close out here. As I was talking about it. All right, I closed my position in profit. So still locked in a 14% gain, nothing bad. Even on that IV push, these contracts never really got lower than I think 165, right? Low 163. So stop wouldn't have gotten triggered, which is fine. But I don't want to be holding something underwater where bulls could break this today, especially when we just broke the trigger here. So I'd rather be on the sidelines and see if that happens, because if that does happen, I'm way more interested as a bull to take advantage of that move, because that should be a decent hard push in my opinion. So we will see. And if I miss it, I miss it. I still made money. That's all that matters. Today is the 29th. Boom. Toby now hitting the year. Eddie said, missed the NVIDIA, but good trade. Thank you, my friend. All right, so now we're attempting to break it here with decent candle and decent volume. However, we had that false break the other day when we had news. I'm trying to find out what that number was. 184.55 here. I'll put a line here. So we'll keep an eye on that. Now this 183.30 level is way more important on the daily chart, but we had that tap up here. There's a little bit more strength to tap it up there the other day. So we'll see if there's any legs to it. This is pretty hot to the upside here on the 1 minute. AI Lamb. Wrong spot in Discord for announcement? What did I do wrong? Wrong spot. Shit. Thank you. Lol. My bad. That's what happens when I tried to do 3 things at once. Well, hope you had your alerts on. At least I tagged it correctly. Appreciate the heads up. Oh, damn it. It's Monday. Give me a break. Oh, boy. Oh, well. As long as you guys caught the trade, it's all that matters. See, this is why we put that stop on. So now those puts are underwater a bit, because we're not lying to ourselves that there's an opportunity here for more downside, but when that trigger level broke, that 182.87, there was a chance that we push higher. Now, if we consolidate here, there's a chance that this is a false break and we push down, or depending on how we respect this line, that we might bounce and push for this 184.55. So I could see an argument both ways here. I think what I'm going to apt to do, especially when I see an argument both ways in such a tight range, is I'm just going to not look at the chart now, because I could see it going either way. And I would rather feel more confident in more of a directional trade because of how this is looking on the 1 minute. It's very hot. It had a late retrace, pushing again. It can keep going, but I can also see an argument where it kind of chills here for a little bit, runs out of steam, and sells off. So either which way, I think I'm just going to walk from watching NVIDIA for a few minutes, come back to it, and see how things perform in a little bit. Let's pop over to the SPY, and then want to look at our sectors like we like to do here. And then we're going to get into our CROX section of today's show. So make sure you stick around for that. We're going to be doing that in probably under 5 minutes. So make sure you hang around for that. If you like very attractive women wearing moccasins, I think they are. That is the whole bull thesis. I'm kidding, but there's more to it. Anyway, SPY breaking above open price here and above that 664.55 area. Q's also getting a really nice rip here. Obviously, it's fueled more than likely by NVIDIA and a little bit by Microsoft here, getting a nice push through that 512.76 area that I spoke about at the open. That area we were waiting all week last week for. It did not happen. And IWM looking a little weak at the moment. Not bad, but comparatively, we're seeing a little bit of a divergence here where the Qs are getting a pretty hard push and small caps are not feeling it right now. So we could see a little bit of a continued divergence on the day. We'll see if our sectors confirm that information. I do want to highlight that our VIX is still elevated. So we still have an elevated VIX. In fact, we're up almost 5% on the day on the VIX. We're actually over Open's price as the market continues to move up. When we see this, and now your UVXY is also green, So when we say this, I like to say that someone is lying. What do I mean? Well, when you see a period of high volatility in the market being green or pushing higher, again, not a one-to-one relationship. I want to always remind you of that. The VIX going up doesn't mean the market should be going down, vice versa. It's not necessarily the case. Yes, there's like an 80% correlation where VIX goes up, market go down, VIX go down, market go up, but it's not always the case. Again, I want to remind you that the VIX is to get its value from the spread between SPX contracts. How far away buyers and sellers are from each other on the options trade or on the options chain for SPX. So as we're seeing some obvious price action volatility here, and as we're seeing the VIX continue to mostly move up, right? We gapped up and we're at least holding the gap right now on the VIX. I like to say someone's lying, meaning volatility either needs to start or should actually start to cool, or we actually see an even sharper move to the upside, like an aggressively sharp move to the upside, if VIX is going to stay elevated, because this would suggest that that spread stays wide on volatility. So there should be, because of how this is setting up now, there should be some level of a move. But let's take one step deeper. Let's go one step further and look at our 0 DTE IV. And if you watch this program, you know I like to use this kind of as a barometer of how volatility is trading on the overall market for the day. And if we're looking at our 0 DTE IV at the money, we're sitting around a 13.5, right? Split these two, about a 13.5-ish, right? Because price is right in between those two. We're actually under our 52-week IV here, which the average is 1586. And I will remind you, and I know you can't see this on my screen because it's a pop-up, but our implied volatility, our IV percentile right now, we're still only in the 33 percentile, meaning 66% of the time for the last rolling 52 weeks, IV was higher than it is right now on the SPY. So that tends to lean into the fact that the SPY shouldn't be as volatile. But with that being said, our IV percentile last week, if you remember, was somewhere around like 19. So even seeing that move from 19 up to 33 suggests that IV has been expanding slowly on the overall market, where we're still in the lower percentile for the last 52 weeks, but it is more volatile than it's been, at least in recent times. Which, I mean, you could look at your candles on the daily, and if we zoom in here, this kind of price action that we saw the last like 5 days or so, 6 days, is more, I want to use the word rocky, than previous weeks, right? So that supports that thesis that we're seeing that IV percentile slowly tick up. That's not necessarily shocking, but again, if you're a trader, these are the kind of things you want to be cognizant of, because these are the kind of things before you make a trade, you want to say, all right, how much should I be putting on the line? How much risk should I be taking, regardless of whatever you're trading? Because again, you always want to use the market as a headwind or a, what's the other thing? It's a headwind or it's the wind behind your back, right? It's either pushing you in the right direction or it's blowing right in your face. So it's either going to help you or hurt you. But at least you want to have that idea of where things are sitting. So that way you're not, even if you take the other side of the trade, whether you're betting a bull or a bear in whatever trade you're taking, you have an idea of which way the market may be kind of swaying. And that kind of helps you with your positioning. As I said before, and why I mainly was looking for the put position on NVIDIA, because of that such a key level on the daily, and because of the fact that we were under this level on SPY, we were a little weak on IWM, which obviously doesn't affect NVIDIA, and the Qs, at least at that point in time, were around that key level here. That made me want to, I should say, gave me a little bit more confidence to take a bear position there short term. Now, time has elapsed a bit. You're seeing a big battle here around our 664.55 LOI, and you're noticing a clean divergence. Look at the Qs pushing to the upside while IWM continues to the downside. This is a clear divergence. This is money coming out of small caps into large tech, at least as things stand right now. You're seeing NVIDIA get a little hairy here. Might reopen my short position. Right now it's around my entry. I opened up at 166 before. I'm going to reopen that short. Okay, I'm short the 180s again, or I guess I'm long the 180 puts at 165. I paid a little bit more than I did last time, but we just broke the green SAR, so we'll see if there's continued downside here. Looking for, again, that POC test and see if there's follow through. So this time, you're making higher lows so far, right? But we did just break the green SAR here, and we saw that reaction at the POC. If this POC breaks, you're more than likely going to come all the way down to the 50 MA here. That's going to give you about a $1.50 wash, which means if we're using conservative metrics, the delta on these contracts is 33 cents. So at about $1.50, assuming no delta appreciation, no other change in other Greeks, which again is the most simplistic, basic way, most conservative way I like to do my math. That means I'm at least getting around 50 cents or so per contract, which puts me roughly at a 30% gain if we tap the 50 MA on this POC break. So that's the trade plan here. Cutting out on the trade would be if we recover and break above this 183.30. And that's kind of what we're risking here. So we're really, this is not going to be an easy area to break, but if it breaks lower here, then we will see that retracement there. You're also coming up to an area of resistance here up on the Qs. I have an LOI up here at 601.65. So we're coming up to that. We came a little bit shy of it, about, what's that, 14 cents before coming back down. So we'll keep an eye on that as we're seeing a few big tech names a little hot, I guess I want to say. Microsoft finally getting that push, now getting a little bit of a retracement here on Microsoft. Nvidia floating around here. And again, keeping risk pretty tight here, especially on the 5-minute. If it floats around here sub this 183.30 area, then I'm going to feel pretty good. But we're going to wait here and see how it reacts in the next few minutes. Again, this is a daily resistance. You want to keep that in the back of your mind that this is an area of resistance on the daily, so it may not just reject right away. So far, if I'm looking at things from both sides of the coin here, as a bull, you're holding higher lows. You're just kind of stair-stepping as you go. But again, if I'm looking as a bear, there's more opportunities, more air, I guess I should say, to the downside, especially knowing where we're sitting on the daily chart. So better risk to reward here for the bears on Nvidia, unless you're hoping just for a straight trend day pushing to the upside, which you will get if there was more volume pushing over this level, which we did see that around here at that 9:45 time. We had these candles come through. We had a nice volume pop to break through that level, but you left a pretty gnarly wick up here with more volume. So you're at a really weird point here where if the bulls don't step in with high volume in this general area, then we're more than likely going to fire to the downside. So it's a matter of just being a little patient on this one. But we'll see how we react here in a few minutes. SPY getting a lot of volatility here in the short term. Not really going a whole lot of anywhere, basically going about 60 cents or so in a very, very short time frame. So it's a lot of volatility, probably perpetuated by the little bit of volatility you got here on Microsoft and a little bit here on Nvidia as well. Apple's looking like it's going to swing to the downside here, at least test the lows here for probably $1 if that interests you. Meta pretty flat on the day. Google, a grinder here, as I will continue to remind you, Google is your canary in the coal mine. As long as it stays bullish on the daily, your Mag 7 are more than likely going to stay bullish. Now, the second this gets a pretty definitive bear break, which I'd look for your daily SAR here to the downside, you're more than likely going to get a pretty gnarly downside for all of the Mag 7. But as long as Google holds its trend, continues to push to the upside, your Mag 7 names are probably going to be pretty okay. Now, that's obviously different from day trading and swing trading and investing, right? So different gears we're looking at here. Open chilling around that 814 area for those of you tracking open. Tesla right now made is that another high? It's a new 52. Is that 52-week high? It's a new, no, it's not. It's not a new 52-week high, but made a new high in general on the daily chart, or at least the localized high up here at 450.98. Amazon around this 221 area. It's a big area to watch if you're a bull on Amazon. Holding that general 221 area, you're going to want to see some bulls come in here. If you lose 221, this is going to go back down. You'll probably get caught here on the 200 a little bit first, but could come down or at least wick this 210.88, this old gap down here. So you want to be aware of that. All right, guys, I'm going to go get some water because I am really parched and I need to drink if I'm going to keep yammering all morning. So I'm going to be 1 second. I'll put on some jams for you. When I come back, we're going to jump into the CROX trade and why CROX is important. So feel free to take a look. I'm going to leave Nvidia up, so if you guys want to watch that, you can. But that CROX trade, I put a little tweet out. We have some Sydney Sweeney meme potential. But also, it's not a bad company if you dig into their financials. We're going to talk about that. We're also going to talk about where it's sitting on the chart as well and why I actually think it's a very unique opportunity, especially in comparison to all of its peers in its operating area. So, or its operating market, its other peers. So hang around for that. I will be back in just a minute. Enjoy some royalty-free jams until I am back. Which one is my be right back? There we go. All right, be right back. feel like I should eventually just make a I need to go get a water song. I feel like that might work nicely. Anyways, welcome back. I am back. And NVIDIA is still sitting around this general area. Let's just watch this for a minute here before we get into the CROX segment, because I want to see if we get that break. Obviously, because it's a day trade, so we want to be very mindful of that and see if there is any follow through to the downside here before we get into the CROX chart. But I guess I'll give you guys a little bit of a preface here before we dive in. Obviously, I spoke about that daily chart, but I want you guys to take a peek here. You guys know I love my risk to reward trades off of my current entry. Now, it's up from where I entered, to be fair, but from my entry, which is again was around, my entry was 77.92. It's offering a 2.5 to 1 risk to reward scenario with a stop underneath 52-week lows. And you guys know how much I love getting companies that are just beaten down and see some bearishness for a short period of time, and it's just made 2 higher lows here on the weekly overall. So it looks like it could be on the cusp of getting a decent reversal, not to mention how it's sitting fundamentally, which we will talk about in a moment. So if you want to pull up that chart, you can follow along. I'll even give you guys my levels here as well, so you guys know what to look out for. And I already gave this was alerted in our Discord when I took an entry. So if you want to check that out, link is in my description. If you want to join us over at Exclusive Trading to learn a little bit more, if you want a little bit more than what this show gives you. Alrighty. NVIDIA is boring me out of the trade right now. You know what we can do? I know the second I look away, it's going to do something, either which way. And we're sitting right on the 21 AMA. We're going to wait. Because I know the second I look away, it's going to do something, whether good or bad, it's going to do something. So let's go back to the market. I'll stay on this page right now so we can keep watching. You're getting a sandwich here on the spine. You guys know when I talk about a sandwich, we're talking about short-term EMAs pinching long-term EMAs here. Typically, the long-term EMAs are going to be harder to break, which you're trying to break right now. As we're sitting around this key LOI at 664.55. Now, if we see the long-term EMAs push it down here and we break to the downside, you're going to sweep the lows pretty quickly here on SPY, in my opinion. So we'll see what happens here short-term. Your MACD is also getting a little tired here on the 1 minute. And you're at least holding some bull momentum with a 54 on the RSI. So we are going to get a break here either which way. Like, shocker, very furu statement of me, but we are going to get a break here. But this could actually be a fake break where we go up, tap the 200, come back down pretty violently. That's what I would be concerned of as a bull on the day. Making a new high on the day, which we just did, wicking and coming down. That's what I would watch out for as a realistic possibility. Which, there's the wick in real time. You guys saw it. These are the kind of things that you learn with experience and time. To watch out, you get those fake breaks. Now, it could just keep going here, could get some volume, but when you see a big old wick like that, you made a new high on the day, and you got these 2 longer-term EMAs here, you're having a hard time, consistently hard time breaking this LOI, you're more than likely going to fire to the downside. And now we're going, and there's NVIDIA. All right, so we're going to watch for a trim here. POC did move all the way up here to 183.08. So my first trim target is going to be somewhere around 182.40-ish. So I'm saying that now in advance, so if you're watching on a delay, you know what to look for. Right around there, you're probably only going to get like 175, maybe 180 a contract, so nothing too crazy. But if there's momentum through that level, we're at least going to tap the 50 MA here, currently trading around 182. I do think we'll go a little bit lower than that, and there is a possibility this goes all the way to 180. Now, again, I want to say if we do drop all the way to 180, I flip long on the day on NVIDIA because there's going to be a higher probability of a slower grind up, assuming 180 holds. So I'd want to wait for that 180 tap and kind of see how it reacts if I am going to flip long. Very volatile round VWAP here on NVIDIA as we are now in another sandwich here. Your short-term EMAs are currently above. Your long-term are beneath, so it's more of a bullish supporting sandwich, as I like to call it. SPY really fighting it out here. Wow, look at that. I have this level that you guys saw earlier, right? I didn't just put this line here now. You know it. 601.65. High a day on the Qs. 601.64. Penny off. Pretty damn close. Pretty cool. Microsoft trying to push to the high of the day, so you're looking like you're going to try to find some strength there. I will remind you guys that VIX is near the high of day. So when we're seeing, so this is something I don't like as a day trader, when we're seeing high VIX and sideways SPY, that's not good. That's really like, I don't want that. I don't want to be involved in that. Your VVIX is also climbing up on the day, and UVXY is also pushing to the upside. So this is, again, when I say someone's lying, it's looking like someone's lying. I think it's more likely that we actually see a downside sweep on the market. I will say, though, Microsoft is looking pretty strong here. If it could break this high, it's going to push. You guys know I am currently short NVIDIA. But if bulls can step in here, this could get a reversal and try for a push. Apple, like I said, it was when it was over here, I said you're more than likely to sweep the lows, which looks like we're about there. Meta is sideways, I won't even bother. Google looks okay. Not bad. And Tesla got pretty bearish there after that new high. And Amazon, this is a mess. I wouldn't even touch this one today. I hate this setup. On the intraday, I mean, if you're a bull, you're looking for higher lows here, but this is ugly. I hate the way that looks. Ugly. Hackett says, Eddie Money, give me some water, 1978. And I really should just keep my water here with me, like before I start the show. I'm waiting for the day I get a Polar sponsorship. You guys are going to see. First sponsor that Polar Seltzer ever is going to get, it's going to be me. It'll be some financial screamer. It's going to be for Polar Seltzer. And you know what? They're not going to pay me. They're just going to send me all of their like weird flavors and I get to drink them on stream. That's all I want. It's like the weird unreleased flavors. Be interesting. Keep things interesting. All right, 10:15. So we got Trump signing an executive order here in about 10 minutes, so just be aware of that. Again, he's going to be talking and doing stuff all day long. He has a meeting with Netanyahu at 11 as well. And again, as I highlighted, I know a lot more people came into the stream, so you got Trump at 10:15, 11, 11:35, noon, 1:15, and 3. So loaded schedule today. And then we also have Fed speakers at 1:30. So we got a busy day in terms of catalysts or potential catalysts on the market. So you want to keep an eye on that. I am really tired of waiting for this NVIDIA trade to play out. So I'm debating, you know what I'll do? I'm going to set I could set a trim at 180. Right, what would that give me? Give me about 9%. All right, I'm going to set a limit sell at 180 for a trim on NVIDIA. That way I can go talk about what I want to talk about. It'll force me to take a trim when I'm not paying attention. While I'm talking about CROX. And then kind of go from there. Add limit sell at 180. Now it's looking like you're getting a little bit of a reversal here. You're breaking the red SAR here, trying to get above here. I would watch right here, 183.60 to see if we get any push above that. Now, if the bulls don't get a hard push out of the gate here, because this is really a good bull setup, to be honest with you guys. This is a solid bull setup for NVIDIA. If it can break above basically right here, 183.61, you got your MACD flipping, momentum still pretty good. However, the way the market's looking, I would treat this as a potential bull trap. Especially, again, the importance of this level on the daily chart. And you may come all the way up here to this 184.55 when I'm, again, like not paying attention here. But I actually think this is set, because this is actually a chart I would look at to take a long, like right around here. But I think it's actually setting up for a bull trap. Because this looks really solid. But I think it's actually going to fire to the downside. So, just telling you both sides of the coin here, right? Never going to BS you on this program. Anyway, let's get into CROX. And I got some notes here, because we're going to talk about a few things with CROX as well. Let me pull up my notes. Alrighty. Oh, I should record this. Bada bing, bada boom. Alrighty. So recently, Sydney Sweeney has talked about Crocs. One photo actually caused Crocs to go up, as you can see here, last Friday, 6.63% on the day, just from posting an ad with the Hey Dude moccasins or whatever on her feet. And actually, when you dig a little deeper, Crocs is actually a decently good business, and that's what I'm going to tell you about today in this video, and why it's also an interesting technical setup. Now, personally, full transparency, I am long Crocs right now, around the 77-ish area. On Friday, I opened and I initiated a new long after the Sydney Sweeney ad dropped, because she's basically a better trader than Nancy Pelosi right now. And that's something you should keep an eye on. But again, that's kind of a meme reason. Let me give you the real reasons, and we're going to look at the chart on Crocs and why you may want to consider why it could be something to add to your current portfolio from a risk standpoint. But first, let's get into the nitty gritty with what Crocs is doing right now that's really good from a fundamental point of view. Obviously, the first thing is that they have a strong brand appeal and a very loyal following. Mostly everyone has a pair of Crocs in their home. I personally don't, but my wife wears them. But I don't own a pair, but a lot of people have a pair of Crocs. They have a very unique product, very unique identity associated with them, and that in itself has its weight in gold. If you've watched my show or you watch my channel or any of my YouTube videos, I really love when very recognizable brands are beaten down on the chart. Specifically, they've lost value for whatever reason, but they hold really good brand recognition, because that in itself has a lot of value that's intangible, right? But not only do they have a good brand, but they have a really good business in general. They really run high margins right now, and they have a profitable track record in general. So they've been generating for the last few quarters pretty healthy operating margins versus their peers. And a lot of this information I'm going to give you guys is comparison for them to their peers. So people in the appeal industry, garments, etc., how Crocs compares to them. They actually have a really solid opportunity I don't think a lot of people are looking at for Crocs and their other brands with their international growth. So there's an opportunity there because they have a very low market share in Europe, in China, in India, and these are massive markets where they could actually expand and sell more product in. And they have fantastic margins. So even if it's a matter of selling these products cheaper in these areas to serve more impoverished communities, i.e. like India, when there's a lot of people and they may not have as much money, they could still make a great profit because they can actually take a smaller cut and sell higher volume. So there's a great opportunity there, I think, for the international growth of Crocs. They've also shown lots of love for their shareholders by repurchasing shares over and over and over. They've continuously increased buyback authorization, and they're willing to return more capital to the shareholders, reward the shareholders by not diluting their stock, which is a fantastic thing if you are a shareholder of Crocs. The last thing I want to highlight before going into the fundamental reasons why I like Crocs, they're very resilient under this macro stress. So obviously we have tariffs and everything going around. There's a lot of consumer headwinds and whatnot. And their management is actually doing a really solid job with cost control. They're keeping their brand strong, and their balance sheet, they're not letting it get out of whack with everything that's going on in the world, which I think is a very underrated edge that they have versus their competitors, where especially in the environment they operate in with appeal, with consumer products, right? Because it's not a staple, it's not something you need, but it's a consumer product that people may want. Having that edge of having fantastic management with great margins is a really, really solid thing. Now, talking about their great margins, we're going to talk about some of their financials, some of the more fundamental things that makes Crocs a very interesting setup. And then we're going to look at the technicals. We're going to look at the chart right now. And even though the technicals aren't fantastic, why it's a really good risk to return opportunity right now, where it's currently setting even after Friday's move. Now, currently, and I've got few points here. Then I'm going to dive into two specific points on why their fundamentals are pretty solid. As I alluded to, they have very solid margins right now. So currently they're at roughly around a 24% operating margin, which puts them ahead of basically all of their peers. 98% of their industry peers, they are operating margins that are insane in comparison to all of their competition, which is fantastic, which arguably isn't really confusing considering they're just selling like foam on your feet. I'm sure cost is not very high, obviously the labor and everything, but makes a lot of sense, and their margins prove that, right? They continue to have that gross margin strength because they've currently reported around about 59.3%, which is demonstrating that they have a lot of strength over their pricing and the control over their cost of goods sold in different markets everywhere. So they have that control over those margins to continue to understand where they can take a little bit more money and where they can shrink that area and find new opportunities, as I alluded to previously when I was talking about that India opportunity, right? Recently, you've seen their revenue grow pretty steadily, honestly. 3.4% in Q2 over the last year over year, and generating about $1.15 billion, which met market expectations in Q2. So they're at least meeting expectations, even though, as you can see on my chart here, didn't look like they were. But is that just fear? We'll talk about that in a minute. And lastly, I wanted to say how management has been talking on their conference call. So I went back and actually listened to a few of their conference calls, and they are really emphasizing reducing inventory and cutting expenses and really trying to push that margin profile, that edge that they have really, which is a strong margin, even further to drive more net income and drive an expansion of the margin to even make even more money on their already large margins. So by controlling that cost of goods sold, controlling how they're making their money, whether it's through labor and their general inventory as well, not carrying so much inventory, is a way that they're trying to move a little bit lighter and still generate a lot of money. Speaking about money, I ran a few formulas here to kind of get an idea, and then I compared them to the industry peers. So I ran forward PE, ROIC, their EV versus their EBITDA, and their EV versus their free cash flow to kind of give an idea of how they're performing financially. So their forward PE currently is around 7.3, and the industry average right now is around 13.4. So basically half as much, or half in comparison to the rest of their industry peers. Now, when we look at ROIC, which is the return on investment capital, they are double the industry standard. So they're showing that they're efficiently deploying the capital that investors are giving them, essentially. Industry average is right around 8%, and they're over 20. So they're taking the money, and this is a rolling 3-year average. They're taking the money that people are giving them, and they're able to do more things with it versus their peers. Not that their peers are bad, but they're doing twice as much theoretically than their peers. I do want to hone in on their EV, their enterprise value versus EBITDA. I can never say that. EBITDA, and their enterprise value versus their free cash flow. So their EV versus their EBITDA is 5.3. The industry standard right now is, or I should say the industry average, is about 10. And their EV versus their free cash flow is 7.5, while the industry average is about 15. So to explain a little further, the purpose of how EV and EBITDA affects this company specifically, or all companies, it shows how the company is valued relative to its operating cash flow. And this is before financing and accounting expenses. That's what your EBITDA is, right? So in this case, a lower number can signal that it is undervalued versus its peers. So it's a good way to compare things across industries or with their other peers. So again, the number that we get for CROX is 5.3, and the industry is about 10 to 12. 10 on the low end. I like to use the low end, so it's twice as well. So I guess if you want to put it in layman's terms, think of your enterprise value versus your EBITDA as how many dollars investors are willing to pay for each dollar of core operating cash, again, before expenses, accounting, and whatnot. But to go a little deeper, let's use the same enterprise value and compare it to cash flow, or free cash flow, I should say, to get an idea of how they compare to their peers as well. So for that, what this does essentially is to measure how expensive a company is relative to the actual cash it generates after their expenditures, after capital investments. So the use case for this primarily is favored by people who are like more long-term investors, which is kind of what I'm looking at here as an opportunity for CROX, mainly trading equity on this name. Because free cash flow at the end of the day is what's going to be left to pay their debts, right? It's going to be left to buy back shares, as we talked about, as they've been doing, or pay dividends, basically things that would benefit you as the shareholder. The more free cash flow a company has, the better, right? So essentially you want to think of it as how many dollars are investors willing to pay for each dollar of real spendable cash that the business can produce. So after everything's paid off, how much money am I going to get back as an investor theoretically in comparison to their peers? So if you want to compare the two a little closer, because both are ways to understand evaluation of a company, your enterprise value versus EBITDA is a way to look at operating performance before your non-cash expenses, and your enterprise value versus free cash flow is a way to look at the actual cash that's left in hand after running and maintaining the business, paying any expenses, etc. So all of these key financial metrics that you want to look at, and you can dig into specific things if you like, but running these are just a few of these ratios you can run to kind of get an idea of how a company compares to their peers. And because of these ratios, because of their current performance, I think from a fundamental standpoint, CROX is actually sitting at a fantastic fundamental point of view. Now, roll that all into the technicals, right? What I master, what I'm proud of, what I do every single day is look at a chart for its technical basis. And on the daily chart, it's not fantastic, but it's not awful either. Now, on the daily chart, we recently had a new 52-week low at the beginning of August at 73.76. Recently, before that Sydney Sweeney catalyst, I should call it, last Friday, we got pretty low there. Recent low was 75.28, and then you had another low here at 75.74. So we're seeing some bulls step in above that 52-week low around that $75 range. Now, I'll remind you, full transparency, I am long around $77. So looking at the setup right here from a technical basis, it is not out of the woods by any means, right? This is not a clean chart to trade to the upside by any means, but it could show the early signs of a reversal here. You are making a higher low on the daily chart. You did have this big volume candle here on Friday, and you moved right up to my first price target here of 81.69. Currently we're beneath it, but we did move all the way up to my first price target in one day from my entry to this 81.69. That puts you in this earnings gap, which we do have other price targets we're going to look at in the earnings gap, but that does put you in this earnings gap from August as well. Looking at the weekly, again, not fantastic look here. You are below all your EMAs, all your MAs, but you are maintaining a higher low. So if there was an opportunity on higher volume, which we're seeing here on the week, look at the last 2 weeks, even the last 3 weeks, volume has been slowly ticking up. There could be an opportunity here for a reversal to the upside, and if it is, it would be right around now. Looking at the monthly as well, this is why I'm going to highlight this is a good risk to reward setup. You are at a low, a multi-month low here, even though we're at the 52-week low. But in this general area down here around the $77 area, you're seeing a lot of basically momentum to the upside, with the exception of obviously where we broke here. But on this level, the reaction above this level tends to be fairly bullish. And when we react to this level, you can even use this one right here on November of 2023, wicked beneath it, shot right back up. This is a very, very key area of liquidity on this chart for CROX. I also want to highlight to you guys the volume on the month. Look at last month's volume candle here. Now, again, it was a big dump, right, because we had that sell-off, but look at the wick that we're seeing on the monthly here. A big wick to the upside, indicating that people are buying the dip, theoretically, on CROX. And now we're seeing a little bit of a slowdown here. Again, so far, the month ends tomorrow, technically, but we are making a higher low on the monthly candles, and assuming CROX doesn't totally tank between today and tomorrow, then we will create another potential reversal candle here on the monthly on CROX. Now, again, as I said, this isn't a perfect technical setup, but because of everything I just alluded to about how CROX could be a very valid setup in the interim from a financial point of view, from a fundamental point of view, I want to highlight how this can be a good risk to reward trade. And I'm saying from a point of view of an investor in equity, not necessarily in options. You can trade options if you want, whatever. But this viewpoint is strictly from a stock equity standpoint. Now, again, my long is from 77, so your calculation may be a little different. But off of my long at 77.92, this currently offers a 2.5 to 1 risk to reward ratio, where I'm risking just below. I have a stop set at 72.99, so that's below that 52-week low. That's me risking about 6% downside to my second price target here at 90.64 for a 16% upside. Now, again, this is equity. It could keep going, right? I could just hold on and wait. But that is the first point where I'd want to say, okay, maybe I realize gains, move a stop up, whatever. That's the very first point where I reassess how things look on the chart. Are we getting a confirmed bullish reversal? What is actually happening here? So that's the first place I'm going to look. Now, after highlighting that, I do want to give you guys the levels to look at here. Obviously, we're in this big gap here, but if you do consider a long on CROX, these are the levels you're going to want to watch. 89.92. That's right around my first price target. I'm sorry, my second price target here. My first one was right here at 81.69. You can also use 81.69 as a new level to long potentially. If we close above that, that could be an area where you consider a long position, as it shows the bulls are potentially trying to build some strength above and into that earnings gap. Second price target here is at 89.92. Third is 96. Followed by 99.12, and you fill the earnings gap up here at 102.51. At this point in time on the daily, if it can crack and stay above and officially fill the gap, you will be above all EMAs and MAs on the daily chart. And I believe on the weekly, you'll be probably pretty close on the weekly as well. So that's going to be a key area of resistance there, which is why I said I believe CROX can go to $100 here relatively in the short term, where I got in. Now, above that, if we see follow through above and through this earnings gap fill to the upside, well, that opens up the door for a few more levels to the upside. Next area you're going to want to watch here is 109.64, and then you push into another potential gap here. Once you pass over 117.76, you break into another gap here of 135.35, which I believe it's not your all-time high, but that's the point where I'm going to look to reassess. Again, tighten up longs again, get really tight here because this is where the air gets much thinner up here. But again, even at that evaluation, you got a nice move here from 80 bucks. What is that? 20, 50, 60 bucks to the upside here. Pretty solid. Let's move up our risk to reward doodad here. Go all the way up to here. If we tap that area, and it's pretty close. That makes it almost a 12-to-1 risk to reward. I'm risking, and again, this is from my personal entry, so yours may differ, but I'm risking 6% downside for 75% upside on equity, which is fantastic. And again, it depends on your patience, depends on your strategy, but that's why I wanted to highlight CROX as a potential long investment, not just because Sydney Sweeney's wearing some of their shoes, but because of their fundamentals and because of the risk to reward this is currently presenting on the daily, on the weekly, and on the monthly. What do you guys think about CROX? Strange Maker says, Idiocracy. I love that movie. I can never say that word, though. Idiocracy predicted that everyone will be wearing them in the future. I don't think I got my fill right. No, we got up to 174 on my NVIDIA puts. I never got my fill, but that's okay. Didn't miss much. Toby says, nice rundown. Thank you, sir. Based on what I said here, and obviously you guys may want to take a deeper dive and whatnot, but do you guys like the risk to reward that CROX actually presents at its current evaluation? It's not just a meme with a hot chick wearing shoes. Though when I splice that out and I make that a video on the YouTube channel, I'm just gonna have this vision of a very attractive picture of Sydney Sweeney and just CROX raining from the sky. That's what I think I'm going to do for a thumbnail. I think that's going to be Chef's Kiss. I don't know if anyone's going to click it, but I think it's going to be a fun thumbnail to make. Yo, Messy, I don't know what that means. Cake? Is it good cake? Does that mean, yes, I liked it, here's cake? And Strange says, love the rundown info, thanks. It's a good opportunity, I think. Again, equity, you're good for a ride here. SPY again, real volatile. We're not going anywhere, but the price action is very whippy. The Qs are looking whippy too, and it's more than likely because you're sitting around this LOI, the 601.65, which I don't anticipate it breaking today, but so far the bulls are holding it together. And IWM is just kind of sideways. The VIX has started to decay a tiny bit, but you're still basically above the open, so we're not really decaying. You're still up 4% on the day. VVIX is going down, so that's a better sign if you're a bull. UVXY pretty flat. Very hard read on the day. Microsoft slowly trying to melt up to the upside. If this fails 515, though, Microsoft can get yoinked back down pretty quick. So just be mindful of that. Great cake. Messy says great cake. Actually, this might be a good opportunity, but personally, my tender little feet can't wear them. Hey, I'm not wearing them either, but I'll buy the stock, man. I don't like wearing them. Messy goes, I'm taking a slice of CROX. Hell yeah, brother. Hell yeah. Like I said, it's good risk reward. Anytime I see, like, these are the things I go shopping for. Recognizable brands that are beat down, that people are bearish on or whatever. And in this case, actually have pretty good fundamentals. Like, there's no reason, as long as they're holding their margins, even if people are just scared and the market, like, poo-poos everywhere, this is a stock that you could even keep adding and adding and adding and adding, in my opinion, as long as their fundamentals are staying the same. And again, like, I obviously treat technicals better, but long term, this is one that would work out nicely. And speaking of long term, look at Cron, baby. Ooh, CRON. Ooh, baby, up to $3. Who was here when I spoke to you guys about Cron? My favorite weed stock. Up 15% on the day. Mamacita. I believe that's why I put this purple on here. I think I spoke about it on the program here at around 206. This is a name that I've been adding now for forever. I love this company. Now, if I'm long one company that I think has tremendous value in the future, it's CRON. I'll say it now, and then 5 years down the line, I'll splice this out and I'll upload it somewhere. And I'll talk about how I was right, and it's now trading $300 a share. I'm dead serious. This company has incredible potential, in my personal opinion. Incredible potential. It's moving up. It's got a lot of hype now at 16. It's 16% of the day, but I will remind you, I've been long all through this mess. And I'll also remind you, I made money on this back in, like, whatever it was, 2018? I longed it back here in 2018, and I sold it up here. And it's like $20. I never caught the top. So I'm not going to lie to you guys, but I sold it. It's probably like 15. Yeah, like somewhere around here. But this stock will and can move one day. It's currently a $1 billion company. I actually think that this company is going to get bought out by Anheuser. I can't say that company right. Busch, the beer company, Budweiser. I think this company is going to get bought out by Budweiser one day. Clip it. And when it happens, we'll come back to this. If you want marijuana exposure, this is the company. Now, maybe don't buy it today when it's up 15%, but this is the company you're going to want to watch. Technically speaking, it's been rocking and rolling ever since it broke above like this 215 area. It's been moving. Nice push up, retraced, calmed down, then slowly did like basically a flat top breakout. Grinding up, higher low, higher low, higher low, boom, break to the upside. Got to love it. Mainly because of this Trump catalyst, which I spoke about in the Discord this morning. Trump mentioning how, or he's endorsing basically marijuana for elderly individuals. So I think it's really honestly a matter of time before we're federally regulated. The state that I live in, New York, is regulated. So a lot of states it's legal. I think it's only a matter of time before it's federally legal. I mean, especially if the government's going to shut down or whatever, and especially if we need more money in the government, guess what? Tax marijuana. And we pay 20% in New York State here. Marijuana tax. Throw your federal tax on top of it, make it 30%, and people will pay it. If they want clean weed, not from a dealer, or they don't grow it themselves or whatever, people will pay a 30% tax. I can almost bet the house on it. For clean, high-quality drugs, they'll pay. They do it right now with prescription. Why would they not do it with weed? Makes total sense. All right, guys, it's 10:30. I do want to fly around the market a little bit, but I am going to watch this NVIDIA trade a little bit more. So if there's a stock you guys want me to take a peek at, feel free to drop it in the chat. We'll do a little stock review. If there's something you guys are long on, something you have a question about, or anything like that, open forum right now. If you have any questions, complaints, concerns, any stocks you want me to take a peek at, whatever it may be, feel free to drop them in the chat. We'll take a run around and see what's going on in the market right now. Oh man, my Costco puts are doing good. I got some 920 Costco puts. Got these at like $8, $7, whatever they were last week, and now currently sitting at around 13. Pretty solid. Look at the spread though. Crazy spread, about $1 spread. Sheesh. My KC puts, I grabbed 15. I grabbed the 15 puts for October on KC at around 85 cents. Not up massively, but looking just to break under 15 there and close those out for probably like a small baby gain. Don't sleep on Target. I'm pretty sure I talked about this on the program. I had to have because I uploaded a video on it. Target is very similar to CROX. Now, financially not the same by any means, but in terms of a setup, very similar look here on a kind of like a double bottom off the 52-week lows on a, again, recognizable brand. This one I would say this one is riskier than CROX. What I like more about Target though is how close the 200 MA is. So if my stop gets taken out, I'd look for an entry again around the 200 MA, this dark blue line on my chart. But similar kind of like bottom feeder I set up. So that's why I like talking about these stocks that are just beaten down to shit and getting long on those. I think UA could be liking. Toby, I'm long UA. I've been long UA. I've consistently added to my UA position. You want to know when I opened my long? really a bad place to open my long, but I opened my long somewhere around here last November. So I've been underwater on UA actually, but again, similar kind of setup, double bottom. A lot of these apparel companies with good brands, they're gonna do one or two things. They're gonna reverse because a lot of them have a lot of tariff fear and whatnot, or they're gonna be buyouts. I actually think Under Armour is actually gonna get bought out. I like their leadership. I think they have a decent team. But what I like most about UA is the evaluation. Currently trading around $5, and it's only a $2 billion market cap. Someone could snatch it up right now for $4 billion. It goes out at $8 and you're done. Or, $10 billion and now it goes up to whatever that is, $20 a share. This is a name that I'm going to consistently stay long on unless we break this 52-week low and melt. But like, this is, as long as it holds this low, I'm going to be patient on Under Armour. I don't think it's going to get all the way down here. We're not getting to financial crisis lows. If it does, it does, but I just find it hard to believe. It's got too strong of a brand, and I think, I don't think I had the program going at the time, but I went long on Walgreens before they went private or whatever. And the main reason I went long, and some of you in the chat will probably remember this because you're in our Discord, but the main reason I went long was because I said they're going to go private, they're going to get bought out, whatever it's going to be. But something's going to happen because they pay too high of a dividend, they're too big of a brand, they're going to reverse out of wherever I bought it, which was like $8 or whatever it was at the time. I think I ended up closing it before the buyout or right on the buyout rumors. It was like $12 or something. But, like, these are my favorite longs, are buying the trash that have really good brand recognitions and management that doesn't suck either. Like, those are the ones to buy. Toby says February 2025 was your long. February. Well, that's not bad. So you're somewhere in the neighborhood of 630 to 77. I think I got my average down. Let's see. I'll tell you right now. My average on UA is... Where's my UA? I am long UA with a... Well, I have it in a few accounts, but... let's average it out. 630? 635 is my average on UA. That's actually my reddest position. Out of all my equity, that's the only one that's down double digits. All my other equity is up. The only other red equity I have right now is Viking Therapeutics. And then, like, I have other ones that are like just 1 or 2%, which are still like they haven't performed yet, but those are my two, like, they're gonna work out. They'll be just fine. Alrighty. Ooh, wow, look at PLTK. I think I don't know if I spoke about this one in the program. Ooh, what a move. What a move. What a beaut. What a beaut. Look at this chart. Hit my first price target here on PLTK. I just actually collected a dividend, a 10% dividend on this name. Look at this candle here. What a reversal through the 50 MA. I got stopped out of this name, I want to say 2 or 3 times. And now I'm definitely green, and I collected a dividend on this one. Love it. This is another one of those bottom feeder names. Very lower recognized name, higher, a little bit higher risk, of $1.5 billion market cap. Mobile game company. So if you like that kind of risk, if you've traded App before, App 11, obviously not the same company, but you're collecting a decent dividend with this company. Yeah, 10 cents a share, and my shares were like $3.30. So for every 100 shares, you're getting $30. Right? I math that right? Yeah, you're getting $30 for every 100 shares at this price. Get paid to wait. Love it. Toby said it's making money that's the problem. Stocks run more the less money they make. That's funny, but you're not wrong. It's because you got to remember the market is forward looking, right? So the market's always looking to the future, where the future money can be made. Now, when it comes to when things get more challenging and scary, then the market reverts to what's safe, what's already making money, right? That's why you see consumer staples perform well when we see strong economic downturns or fears of recession, whatever. You see your staples perform better because people want to put all their money in, like, where they know it's not going to go, going to go bust. You're not going to lose it all. That's where they want to go. CROX in a little bit of a move on the day here. Must have been the mention on the Atomcash angle. I'm like the new CNBC. Last one I want you guys to take a peek at, Grinder. GRND. You know why I like this outside of a recognizable brand? They have a monopoly in the market. Sure, people who are, I guess you say, just not straight sexually wise, can use other apps, right? But this is the go-to. This is the go-to hookup app if you are not straight, right? And that in itself carries value because it's a monopoly. You have a locked-in audience that aren't going anywhere else, and that is very unique. I think Grindr is going to get bought out, and this is another buyout opportunity. That's why I'm highlighting it to you guys. Currently only a $3 billion market cap. I think there's an opportunity to get this company bought out by like a Match, or even see a merger with like a Bumble. Bumble doesn't really have a lot of money, so that's probably less likely. But look at this weekly chart down here. Building a little bit of a base, ready for some level of reversal here. It's really good risk to reward, in my opinion, if you want to take a peek at Grindr. I might do a little segment on that later this week, because I'll probably do a show tomorrow, so maybe I'll highlight it on the show tomorrow. I like highlighting those stocks, kind of giving you guys like a rundown like we did with CROX today. Do you guys like that, by the way? Or do you like the more informal talk when I'm just like going through charts? I feel like it's better when you guys get like with CROX, where I give you a little bit more background on like a decent risk to reward setup, decent if it's a technical setup, plus you know the fundamentals are good or whatever extra piece I can pull numbers for and prepare like a segment for you guys. If you guys enjoy that more, let me know. If you like me just to randomly talk about stocks sometimes, I could do both obviously, but let me know what you guys take more value in, I guess I should say. Going back to the market here while you guys think about that question. Again, it's getting sandwiched here on the SPY. Not much to see. The Qs are rejecting this key level of 601.65 pretty vehemently here. You are starting to break lower highs. You're sitting on the POC here, so iffy. Meanwhile, IWM trying to get some legs, trying to get a little bit of reversal out of the gate here. And NVIDIA is just consolidating around this 183.30. Just sitting here. Nice and comfy. The longer it sits sub this level, the higher the probability on the 5 minute we're going to pull lower. So it's really kind of like a waiting game here. Toby says fundamental analysis is always my favorite. It's obviously the go-to when you're trading, when you're investing in equity, obviously. When you're trading, it's kind of different. You want to look at a few other things, especially technical analysis. But if you are investing, you're trading equity, it's really, really solid when everything lines up. We did this with Grab too, where the technicals line up, the fundamentals line up. Now Grab is a little bit riskier because they don't have as, like, in comparison to CROX in terms of like cash flow, but they have like a strong brand and a good what's the word, footprint, not footprint, but slipping my mind. I want to say like structure. They have good they have the setup, they got the app, they have all the areas controlled already. Monopoly, I can't think of the word right now. That's going to bother me. But those are the kinds of things you want to look for. Those are the times where I take like a leap trade too, where, and I might even take a leap trade on CROX if it goes back down a little bit more, where you're seeing a solid setup, you're seeing good fundamental support, and you see a good technical support. Now with CROX specifically, that technical support's not there for a leap just yet, but I will take a stab at a leap on CROX probably if we get above the 50 MA. Because then it's still a little chancy, but I can work with that. Hacker says, right now NVIDIA is resembling a flat top break, but not strong. What are the details you look to differentiate between a good flat top break and one that's likely to fall? Well, let's look and see. You're talking about the daily? Because the daily definitely looks like a flat top break, I will agree. You could even argue that there's an island bottom here, which tends to be a very bullish trend on the daily. An island bottom where you gap down, build price action, gap back up, typically within like a 5-day window, which this is a 6-day window. So you have an island bottom here. You could also argue like an inverse head and shoulder here on NVIDIA on the daily. But are you talking about intraday or are you talking about the daily? I say not strong because the volume isn't there on the pushes. I'll wait for your answer and I'll answer you. The VIX is slowly pushing to the downside while UVXY goes up. Very interesting. Hatchet says he's looking at the 1 minute chart. All right, so you're talking about like this day trade. So in this scenario, what I'd look for here, Like you just said, you're alluding to the volume. The volume is key here. You've got a very, very, very tight chart here. When it's saying very tight, you're going to make a move either which way, which I know, Fugger, right? But you want to look at when you get really tight on the 1 minute, I like to look at like the 5. So what I'm looking at here, and then also take into account where we're sitting at on the daily. So we're sitting at a key level of, I guess you can call it supply if you're a supply demand trader, on the daily around this 183.30 with the extension potential to this 184.55. On top of that, if we're looking at this really short term on the 1 minute, you're making, is this exactly higher lows? Let's see. 60, 60, 62. So you're just making kind of like the same, like literally almost exact to the penny highs here while we're kind of grinding along. And you're not even making necessarily lower. I mean, you made a lower low here, but we're just kind of a period of consolidation. So depending on where we're sitting on the daily and on the longer term charts, this would push me more one way or the other, where you could get a flat top breakout, obviously on the 1 minute here. But if I'm looking more at the 5 minute intraday, and yes, this looks even more like a flat top breakout, I'm looking at how extended it is up here and knowing that this is a level of key resistance again on the daily. Then I have to weigh the odds in my head of what is the probability of NVIDIA theoretically breaking this key daily level today, considering the environment. So again, we're getting into this specific trade, but considering this environment that we're in today, with where SPY's sitting, where Qs are sitting, where IWM's sitting, where volatility's sitting, I find it a lower likelihood that NVIDIA could break to the upside. Now, can it? Yeah, of course it could. Anything could happen. News could drop, whatever moves, right? But because of that lower probability, the more volume we're sucking out at the highs here, right? The more buys and sells that are up here, you're building an even bigger case for a sharper downturn because the bulls keep getting rejected over and over and over and over and over and over. Now, where I would change my tone here is watching the 5 and the 10 minutes specifically. You'll note here on the 5 minute, your MACD is starting to get really flat, where your signal line's starting to cross above, or I should say your MACD line's crossing below your signal line, which can indicate bearishness. On top of that, you'll note that you still have this green star coming up, and we've basically been riding the 8 EMA, 813 EMA up to the upside on the 5 minute here. If and when there is a bear candle here, right, going at least below VWAP, which we saw here with a quick reversal here at 1025, you're more than likely going to crack that green star. That's going to add momentum to the downside. Again, theoretically, your MACD will cross over more aggressive, and it will also push more than likely your 10-minute bearish as well, because you're going to be under your 8 EMA on the 10-minute, and you're going to more than likely flip to the downside your MACD on the 10-minute. So, again, it's a multi-pronged viewpoint here, where we're looking at the overall market as a whole. We're looking at volatility today, and we're looking at specifically NVIDIA on the daily, and then we're looking at the 1 minute, the 5 minute, and the 10-minute to kind of formulate a full idea of where NVIDIA could go or should go today. Now, I will also like to say, I'm not saying this is going to drop all the way to 170 or anything ridiculous, but again, getting down to this like 182 area and then potentially yoinking all the way down essentially to like open 180. Now you've got the 200 MA, it's slowly moving up, so you'll catch some volume there. But realistically, this could get down to 180 and put these puts at least in the money. 180 is where I definitely evaluate, just walking, because it's a day trade, right? I'm not looking to swing for the fences here, but it just takes one of these candles here, because your EMAs and MAs are so tight. You have so many technicals up here. You got your POC, you got your SAR, you got all your EMAs and MAs. It really just takes a period of, how many cents is this? 60-cent red candle here to wipe out all of these like that. If you want to be even more specific, it takes 20 cents right now, a 20-cent red candle from current price, to go through all your EMAs and tap basically POC. So it's all about risk to reward. It's all about what is the probability that a flat top breakout happens versus it being a rejection on the day, basically making like a big lowercase n. And the probability is higher for at least a trace to the downside, or a retracement to the downside before another attempt, is essentially my trading thesis here, that we do go lower, and then depending on the reaction lower at the 200 and even at 180, worst case scenario, there could be a reversal trend to the upside, which is why I said at 180 I'd consider a long, and then even potentially swing that long into tomorrow, with tomorrow being Q3. So that's the whole kit and caboodle of how my mind works. Hopefully that's helpful. I'm going to hop off here in a second, guys, but I do want to highlight tomorrow. So tomorrow's Q3, or I should say the end of Q3. and what you may want to expect going into the end of the quarter. So we have something that's typically happens called a window dressing. It typically happens at the end of the day. It could happen during the whole day, may even start happening today. But essentially, a window dressing is where hedge fund managers and people who trade for a living, trading other people's money, want to get their bonuses. And they do that by making things look really, really solid, right? They make things look really, really good because they get a cut of, how much money they make or how much percent gain that they're performing at, whatever. So window dressing can occur where some money rotates into some more volatile instruments to make a bigger gain. Sometimes money flows into some aggressive contracts to make a quicker gain. You may see some false flags as well on certain names. Typically, what I've noticed is that you see a harder push on some smaller medium cap names as like momentum trades, and then that same money that's now made theoretically rotating back into like your Mag 7. So if I'm a hedge fund manager, right, theoretically, maybe I take all my money out of Apple today, and then I go load it into Cron calls, and I make 40%, and then by the end of the day I load it back into Apple, right? So the money just switches hands very quickly, but now I've got a bigger gain to show off and to write home about. So that's a realistic possibility. Now, how does that affect the market? It makes the market typically more bullish, but kind of like this kind of price action, very whippy. Whenever you hear me say whippy, the bigger price candle swings very quickly, but not really going anywhere. And that's kind of what you're seeing today, where we're seeing big moves, again, theoretically, one way or the other here, but not really. Like the high a day right now, we're sitting around like 665. The low a day was 663.73. So we're only at like $1.30 range on the day. It's a very tight range for the SPY, all things considered, especially with elevated VIX, which is now getting back to open. But all things considered, very whippy to see the price move around so aggressively in this range, not really forming a strong trend up, not forming a strong trend down. And that's what I think would see more or less perpetuated through the rest of today into tomorrow. So that's at least what you should be prepared for going into tomorrow. And on that note, I'm going to wrap it up here. Thank you all 200 some odd of you for coming out today. I hope you guys enjoyed the program, learned something today. And if you like the program, don't forget before you go, because I didn't ask you a second time, do me a quick favor, hit a like on the stream, drop a comment, say bye, whatever. Interact some way so that the algorithm likes me a little bit more. And if you haven't already, pop over to the YouTube channel, hit subscribe. Once we get to 500 subscribers, this will be an everyday show. So if you enjoy the show, you want a little bit more, all you gotta do is pop over to YouTube, hit subscribe. And I will be live tomorrow at 9:15 to do another round of As the Stock Market Turns. So hopefully you guys have a great rest of your day, and some will tell you may need an extra trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash angle. Enjoy the rest of your day, guys, and remember, precision beats prediction every damn time. I'll see you tomorrow at 9:15 a.m.
The time has passed, and that's a wrap.